All right, everyone, we have a big announcement today. It's the Bank of Canada rate announcement for June 5th, 2024. We have a rate announcement happening at 9:45 a.m. today. So if you're joining me on Canadian Mortgage Weekly and you're looking to see what's happening with interest rates, you're at the right place. So you can find me on Instagram, Facebook, TikTok, LinkedIn. You can also find me on X. And if you're looking for news like this, make sure you like and subscribe, and you'll always get notifications when my next show is coming out. And you'll always be able to see when the next rate announcement's coming out in Canada. Because we're going to have a lot of these over the next few years, and a lot of people are hoping rates come down. Give me a like if you think rates are going to come down today, because there's a lot of talk about rates coming down today. I'm going to take a look at if rates are actually going to come down today and give you a prediction by how much I think they're going to come down today. So join me today. We're going to have our announcement live from the Bank of Canada at 9:45 a.m. And if you're just joining me now, my name is Joe Bladek. This is Canadian Mortgage Weekly, Canada's weekly mortgage news video podcast. And we do these live rate announcements every time there's a Bank of Canada rate announcement. All right, so what I like to do is go across some of the news that we've been seeing coming up to this rate announcement. Is the news leading us in a direction that there could be a rate cut today? Is the news leading us in a direction where there could be a rate pause today or a rate hike? I really don't think there would be a rate hike at this point in time. Doesn't really seem like it's in the cards. However, if we look at the news that has been leading up until today, I do see that many news outlets like Global News, all the Canadian news outlets, they're reporting that cuts are either on the horizon or imminent or coming. So what does that mean? Does that mean today? Because that would actually be pretty fantastic. It would be really fantastic for a number of reasons. There are a lot of people right now that have mortgage renewals coming up, and their mortgage renewals are coming in at incredibly high numbers. Some mortgage renewals are coming out with $200-300 more per month, and that's just in the extra interest alone based on these higher rates. And if you have a larger mortgage, some of these mortgages are coming out, $400, $500, $600 a month higher, $700 a month higher, and that's just in interest costs alone. So a lot of news outlets are reporting that there are rate cuts imminent. They're not specifically saying that's for sure today, but they are saying things like it's definitely a really good chance that it could happen today. So that's good news. Now, GDP growth, let's talk about GDP growth, because that's another thing that the Bank of Canada is going to look at. And there's been a lot of news about the GDP growth in the market right now because the GDP growth in Canada has also been slowing. We've seen the GDP in Canada drop to an annualized rate of 1.7%. So because that's lower than what Canada's really looking for, that could also mean that rates could come down imminently. Whether that is today, I am not sure. I'm going to tell you my prediction at the end of this rant here, because we have a rate announcement coming up in about 10 minutes, everyone. So the rate announcement will be happening in 10 minutes at 9:45 a.m. So whether you're joining me on TikTok, Instagram, LinkedIn, Facebook, or X, make sure you hang in there. We have about 10 more minutes left. So GDP has slowed, and if you're just joining me now, we're going through what are we hearing from the news. The last thing that we've been hearing from the news also is that the last time there was a rate pause was, the last announcement actually, there was a rate pause. So there was no rate increase, no rate increase. What's their bond yield been up to? That's another thing I like to follow here on Canadian Mortgage Weekly, the 5-year bond yield. 5-year bond yield is a metric that determines and predicts fixed rates Fixed rates follow the bond yield just because that's the way the banks price their mortgages. And the 5-year bond yield is currently at 3.48%. And with it being at 3.48% right now, that means that it's a drop of about 50 basis points to where it was in recent weeks. That's quite a large drop. So I wonder if that is representative of the market coming back and pricing in a rate drop today. I really highly doubt it. I'm highly doubting this rate drop today. As I'm going through this news today, I mean, it does look bad, does look good for the rate cut, but it doesn't look bad enough overall for that rate cut. But let's keep going. The CDOR rate, 5.19% is currently sitting at. That's actually pretty good. It's a decrease of 20 basis points from its high point. It's sat at its high point for a number of months, actually. So to see it come down like that is very refreshing. We need to see the CDOR rate come down because it actually predicts variable interest rates and the Bank of Canada rate. So with it coming down 20 basis points, it doesn't actually predict, sorry, I need to backtrack on that. It sets up whether or not a variable rate is more competitive than a fixed rate. And a lot of my clients use this because they want to know, is it more competitive to get into a fixed rate right now, or is it more competitive to get into a variable rate right now? Where am I going to win over the next few years in my mortgage term by taking each product? So the CDOR rate has come down, which means that variable rates have become more competitive in recent months. And that's actually pretty correct because a lot of variable rates have been taken by my clients in recent months because they have wanted to get into the market with a variable rate with the understanding that when variable rates start to come down, there'll be automatic rate decreases on their mortgage and rate payment decreases, so their payment will go down. So they're looking forward to that lower payment. And the idea is that the payment will go down low enough that'll be lower than the fixed payment they would have otherwise received. And overall, the interest accumulated during that mortgage term is lower than the overall interest from a 5-year mortgage term that is a fixed rate. Anyway, that's a little bit of a rant. We have about 6 more minutes until the Bank of Canada rate decision is announced. I can feel it, guys. I'm pretty excited. Being in the mortgage industry as a mortgage broker now, financing real estate for 14 years, I am so pumped about this rate announcement because it could be a start of something crazy based on what I've heard from other people say, or it could just be building the anticipation for the next one. All right, so what we need to do is we need to get into the next item of business here, and that is the articles. What have the articles been saying? What have the stats been saying? Well, I've gone through some of the inflation data. Inflation's currently sitting at 2.7% for Canada. That represents a decrease from the prior inflation month. And we are seeing an overall trending down in Canada on inflation. You can clearly see that. However, Tiff Macklem has been saying that we need to see a very steady decrease in inflation. And that was just, I think, 2 or 3 announcements ago. So to have the rates come down based on the inflation coming down for 2 months in a row, it's going to be kind of far-fetched. I really do want rates to come down today, but I really don't think that they will. I'm still thinking that we are going to have an anticipation building for the next one. Anyway, fixed rates are still lower. That's good. Fixed rates are currently lower than variable rates. For example, a prime rate in Canada right now is 7.2%. If you want a variable rate mortgage, quite often, if you're a AAA client, you're going to get prime with a discount. So that's good. But still, that's not beating the current 5-year fixed rate. Currently, the 5-year fixed rate sitting anywhere around high 4s. mid fives, in that range for a AAA 5-year fixed mortgage rate. So that's a lot more competitive if you think rates are going to stay the same or not come down anytime soon. Take the 5-year fixed rate. A lot of people are doing that. Also, some lenders have predicted or have gone on record saying that mortgage rates will come down today. I know I was at a mortgage event a few months ago, and obviously they rewrite things all the time. They change things all the time. Although I remember at that event, there were a few lenders that said that rates were coming down in June. Now that we're in June, I can't wait to see if they will come down today. I think it's actually going to be a pretty fantastic start to the rest of the spring market if rates do come down today. Okay, what are clients saying? Well, clients feel that rates could drop. A lot of clients of mine have paused their search on housing because they are thinking rates could drop. And because of that, it's made the market a little bit strange right now. It seems like not really many people are looking to buy a home right now. And if they are, they're kind of waiting on the sidelines because they want to see where rates are going. Some people have jumped into the market, though, with the buyers that I have had. A lot of them have been taking variable rates. And with those variable rates, they're expecting that those rates will come down and they'll see automatic benefits from the rate coming down and the payment decreasing. Okay, and clients are also starting to really feel the impact on their mortgage renewals. I said that earlier in my episode. I'm going to say it again. Renewals are coming in hundreds of dollars higher for clients that have had their mortgage for the last 5 years. They're coming out of a mortgage market where it was 2-3% and renewing now at 5% or 5.5%. That is such a big difference, and it's causing a lot of people to panic. So rates coming down today would be a relief for some of these folks that are renewing in the next few months, because every little bit counts. Okay, so we are about 1 minute away, guys. 1 minute away from the rate announcement. Let me just bring that up here today. I am so excited. We have the Bank of Canada rate announcement here live on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, here with Joe Bladek. We've been doing these rate announcements since the beginning of COVID. I've started doing these, and it's been great because we covered every rate announcement from when rates were really low to when they dropped to when they went back up. So it's going to be great to see what happens today with this rate announcement. I'm watching it right now. There's a rate announcement to come in about 1 minute, and it will be published here on the Bank of Canada. I'm going to release it here, but my prediction is I don't think rates are going to come down today. There's going to be a higher anticipation for the rates to come down in the next rate announcement. However, I could be wrong. I could definitely be wrong. I just think that there are signs of the rates that are going to come down. Oh, we have the rate announcement, and I am wrong, everyone. Rates have come down by 25 basis points, everybody. The Bank of Canada has just released its Bank of Canada rate decision, and rates have come down by 25 basis points. This is great news. So let's get into how this is going to impact mortgage holders in Canada. Wow, I'm so excited. I can't believe rates came down today. I honestly thought, everyone, that we would probably see a rate cut in the summer or the beginning of fall. But we are seeing one today, everyone, a 25 basis point rate cut. Let's see what the Bank of Canada is saying the reasons are for this rate cut today. All right. So they are citing the GDP growth of 1.7% that I did mention earlier in my episode today. I couldn't believe it, but they are mentioning that here as being a factor. CPI inflation at the 2.7% that I did cover here as well. They did see that over a 3-month measure, it has slowed down considerably enough for them to do this rate cut today. So that's fantastic, everyone. I am really excited for Canadians just looking at buying homes or refinancing or renewing their mortgage, because every little bit counts. And today we saw rates come down by 25 basis points. That is absolutely fantastic. And let me get into right now on how much this is going to affect Canadians, because you want to know how this is going to affect you today. Well, with this rate change today, prime rate now, prime as of 5 minutes ago was 7.2%. What you will see now is if you have a variable rate mortgage or a variable rate credit card or a variable rate car loan, you'll get an information notice just informing you that prime rate now has dropped. And prime rate has dropped from 7.20% by 25 basis points to 6.95%. We have not seen 6.95% in a long time, Canada. I'm so excited. This is going to mean that for anyone that's in a variable rate mortgage that has a static payment, for example, this is a variable rate mortgage where when the rates change, the payment doesn't change for the customer, but rather the amortization shifts. So it's the amount of time that it takes to pay off your mortgage that goes up or down. And this is now going to shift it for those folks that have had their amortizations increase to the sky's the limit from these rate increases. They'll see their rates, they'll see their amortization shift downwards. The payment will stay the same, but amortization will shift downwards. Now, for anyone that has a mortgage that is a static amortization and a flexible payment, which is the more dominant variable mortgage in Canada, the adjustable rate mortgage, what it's usually called, you will get an information notice similar to that. Prime rate has dropped from 7.20% to 6.95%. And with that, you'll see your payment decrease accordingly with that lower amount of interest. So that's fantastic news as well, because having a lower payment really helps folks right now in cash flow sensitive situations. We need to really look at these situations because with renewals coming up, I'm seeing Canadians come to the table, they're calling me, they're asking me for help because they don't know what to do because the renewals are coming in $200, $300, $400 higher. So with the renewals where they are at, this is going to make a huge impact for anyone who wants to take a variable rate mortgage and consider possibly the rates coming down further in the future, or a fixed rate mortgage, because I think fixed rates will probably come down even further if we see that the Bank of Canada has entered into a rate decrease cycle. All right, so that's how it's going to affect variable rate mortgages. Those are the static amortization and with a static payment. Now, for anyone that's in a fixed rate mortgage, it's really not going to affect you right now until your maturity date. When your maturity date comes up, say if it's later this year or next year, the benefit for you is that we've now entered into a rate decrease cycle. And because we've entered into a rate decrease cycle, we will have the opportunity to take future mortgages at slightly lower rates. And depending on how much this rate decrease cycle decreases the rates, it's really going to tell how far those fixed rates will come down in the future. All right, so anyone with a variable rate car loan or a variable rate credit card, same thing. You'll see your prime rate drop, which will essentially lower the interest on your products, which will be fantastic. Prime rate on those products will drop to 6.95%. However, if you have a car loan or a credit card, quite often a credit card is prime plus type of interest. So you're paying 6.95% plus whatever the credit card extra is charging on that. And the car loans are set up with their own metrics as well when we talk about discounts and premiums to the prime rate. But what's really interesting is unsecured credit lines and secured credit lines and home equity lines of credit, because these are the products that the rate cuts really impact. Let me give you an example, everyone, because I'm sure there's a lot of you who have a balance on a line of credit, and you're probably really sick and tired of paying all this unnecessary interest over these last few years because rates have gone up. And say you're carrying $100,000 on this line of credit, and prime rate up till now has been 7.2%. So what does your minimum payment work out to be? Well, a minimum payment on a $100,000 balance on a home equity line of credit, it's a very high payment because you got to take a look at the prime rate and the premium rate. So a line of credit on a home, usually it's prime plus half. So we'd be looking at 7.7%, which would make the minimum interest payment for each month $642. So when we look at $642 and compare it now to what the prime rate is now, and compare the difference on how much of an impact this is going to make to the average Canadian that's holding a $100,000 balance on their credit line. Well, let me give you that example now. $100,000, prime rate's now 6.95%. So plus half a percent, you're looking at 7.45%. $621 per month. Wow. So $20 a month can really make a difference, because over all the months added up, that really can for a lot of families right now, that is the difference between, buying the snacks for the kids at school, or filling up the tank just that much more, or maybe even one more tank fill. I go to the gas station right now, I will see people putting in $20 at a time. This is $20 extra. That's another fill up right there. But really, I see a lot of Canadians trying to save wherever they can. And the fact that we've seen rates come down today, that's awesome news. It's going to put those lines of credit into a lower minimum payment position. So if you are going to get a notice, you're going to get a notice now if you have a home equity line of credit from your lending institution, just letting you know that prime rate has dropped and that you will notice a difference in payments. And your next payment on your next bill should be at that lower rate. If not the next bill, the next bill after that. So keep an eye out for that. And unsecured credit line holders, that's an even bigger savings, because if the credit line is unsecured, it's usually prime plus 5. So prime plus 5 before would have been 12.2% on a $100,000 credit line. You're paying such a high amount of interest on that $100,000. So let's look at that here. 12.2%. So that minimum payment's $1,017. And with the rate cut today, you're comparing $1,017 interest payments to we're comparing it to $996. So again, big difference in that. You're going to save some money, and you're going to be able to put some money aside now that everyone's cash flow has lightened up just a little bit in Canada. Anyone that has a variable rate mortgage, or a variable rate car loan, or a home equity line of credit, or a unsecured line of credit, or a variable rate credit card. If you have any questions about any of this that I'm talking about, you can always connect with me. I'm a mortgage broker. I've been in Ontario financing real estate for 14 years. You can book an appointment with me using the link in the video description below. You can book a 5-minute call. We can talk about your mortgage renewal coming up, what's right for you, and we can look at the options and look at all the lenders, including the big banks as well. And if you just want to follow me as well, like this video, share this video, and help it get out to your friends and family, because everyone wants to know today that the rates have dropped. I would like to take a look at when the next rate announcement is, as well as some of the markets now and what they've been up to now that we've seen a rate decrease in Canada for the first time. You know, this is the first time rates have come down since the last time there was a decrease was in March of 2020. And that decrease was a 50 basis point decrease. March of 2020, does anybody remember that? That was the COVID decrease of 50 basis points, really brought rates real low. But today we've seen a 25 basis point increase. We should not discount that. That is a fantastic start to a possible long-term rate decrease cycle. If we look at the historical decreases that the Bank of Canada has done, we've seen that once the rate cut cycle starts in Canada, that it tends to be pretty aggressive, and the Bank of Canada does not waste much time trying to get the rates low to a point where it starts really stimulating the economy. And that's a good thing, because we want to see the rates stimulate the economy. And I don't think that 25 basis points will be enough to do the job that the Bank of Canada is looking for. But because they started a little bit earlier, what do you guys think? I think that because they started a little bit earlier, they may not need to be so aggressive on that first rate cut like we saw in March of 2020. Because like I said, when I went to this mortgage broker seminar, we had lenders from all over Canada talking about rate cuts. And there were lenders that were in disagreement, with some saying June, some saying July, and some saying even September. So it's really interesting to see that June was the month that we started with these rate cuts. Okay, let's take a look at the next Bank of Canada meeting. I know it's in July 24th. July 24th, we'll be meeting again here on Canadian Mortgage Weekly to discuss the Bank of Canada rate decision. And like always, like, comment, and share. Feel free to book an appointment with me for a 5-minute consultation about your mortgage. I've been financing real estate for 14 years, and you can do that on the link description in the video link in the video description below. And I would love if you could follow my channel so I can get these information updates to you all. So if you're just joining me now, what I want to get back into is just let you know that the Bank of Canada had its live rate announcement today at 9:45 a.m. They did drop rates by 25 basis points. It's actually pretty fantastic. I got really excited when I saw that, because it's been a long time coming, everybody. I've seen and heard all the stories from Canadians calling me saying that they really need some sort of relief on their mortgage renewals. And now I think this is going to be the start of something really good, because every little bit counts right now when it comes to your renewal. So if you're shopping around for your renewal, make sure you start early. I always suggest 4 months out, and you can always look at what they're offering you versus what's available in the market. I always suggest finding out what your bank offers first, and then going and shopping around either on your own, which I made a video about that, on how to do your own renewal shopping on my YouTube channel. Or you can contact a broker at that point and see what kind of rates are available and what sort of financial institutions are offering promotions right now that you might be interested in. So if you have any comments or questions, please leave them below or direct message me. You can also book an appointment with me. Bank of Canada decreasing rates today for the first time since March of 2020. So fantastic. It's so fantastic to hear that. And I am so excited for Canadians, all homeowners. This is going to be a great year, because I don't know, I've seen before when rates have dropped in Canada, they've dropped pretty aggressively. So if we look back, We've seen even in 2008, we've seen rates in 2009, they started dropping pretty aggressively. So we'll see how this goes. I'll keep you guys all updated on my channel. Thanks for watching. Appreciate all the time you guys have spent with me today, and we'll see you next time. And before I go, you also may have noticed, but my mascot, Interest Rate, is not with me today. She is my little guinea pig that comes along. She wasn't here today. She's not feeling well, and she's going to be here next time. So we'll see you guys all.